Hello. Hello, welcome back to Laptop Trader channel on YouTube. My name is Philip and I'll be hosting this presentation. I'm here to share my trading experiences and give back to the stock trading community one video at a time. This channel is mainly for new traders or new investors, but all are welcome. We publish a monthly video which covers the current markets, stocks, and ETFs. Our education information covers topics such as stage analysis, technical analysis, fundamental analysis, market cycles, trade risk, trade entry, trade management, and trade exits, and how to create confidence by putting the odds in your favor. If you wish to be updated when new videos are published, hit subscribe now. My email contact is laptoptraderphil@gmail.com if you have any questions or need any help. This video is for information only and should not be considered investing advice. Caution, trade at your own risk. Most stock day traders lose money. Please protect yourself at all times. Any stock suggestions are up to you to decide if that is appropriate for you. Good luck and God bless. So let's get to our January video. Start now by educating yourself on how markets work and finding out what is right for you. Invest in yourself and then invest in the markets. Happy New Year. So here's our monthly agenda. We'll talk about a little bit about setting goals. We'll talk about how 2 years in a row, and we had no Christmas rally again this year. The quick market review of December 2025. Which sectors or industries are poised for a big move this year? I'll invite you, if you're new to investing or trading, to review my first couple of videos, such as introduction to the channel and like chapters 1 and 2 and the introduction to trading stocks. There's also a video about where and how to come up with some new trading or investing ideas in individual stocks. So there's 3 or 4 videos there that should help out a newcomer to the channel. I've got a case study in Cardinal Health, symbol CAH, from last year. I think you'll find that interesting. And a look at the 4 stages of price action using UPS, United Parcel Service, as an example. And then on the bottom after this video, I will link to those other 3, 4, 5 videos below this video. Okay? So that should help get you up to speed. Let's talk about the market performance numbers for 2025, right? Year beginning to year end. So if we look at the S&P 500 index or the ETF SPY, we closed on 2025 at 681.92. We opened the year, closed 2024 at 586.08. If you divide 2025 by 2024 on your calculator, you will see a 16.35% gain in that index or in that ETF fund. Plus, it pays a 1.49% dividend. So if you're invested in the market or in the S&P 500 index, you should have seen about a 17.8% total return. Okay. If you had other holdings like in the NASDAQ 100 ETF or the NASDAQ index, that was a little bit better, showing over a 20% return, 20.17% return in the NASDAQ. My personal trading account return was just over 34%, so I had a little bit of outperformance versus the major index averages. So the question is, were you invested and or trading in 2025? If not, you missed out on a great market, okay? Even though the beginning of the year was not that great. So 2025 was an interesting year. About the first, 4.5 months, the market was sideways and down. Not a very good trading environment, at least not for my plan. And then the second half, second 2/3 of the year was really a strong bull market. Okay, and you can I found this website to be very helpful. If you want to look at some of those numbers about performance, go to stickcharts.com. I found that a very helpful website. All right, let's talk about setting goals for 2026. Okay, so if you did not have any goals for 2025, this is the time to think about some investing and or trading goals for 2026. Okay, that may be as simple as putting together a budget and setting aside some money for trading or investing this year if you haven't already done so. But if you fell short on investing or trading, then let's fix that now. Start working on setting some money aside for yourself and your future now. If you wish to trade, then get some money for trading and then start trading or learning how to trade. If you had a good year, then work on increasing your trading goals for this year. Always keep learning. This business is one that you must stay engaged, you must continue to learn, which is something that I really like about it. Okay? Maybe read a book on investing or trading you want to read. I've had other videos with recommended reading lists. 3 off the top of my head would be How to Make Money in Stocks by William O'Neill, One Up on the Market by Peter Lynch, and how about something like How to Profit in Bull and Bear Markets by Stan Weinstein. That's another very good book. How I Made $2 Million in the Stock Market by Nicholas Darvis, another excellent book. One of the newer books that's out is from Trader Lion, a book from current book from Trader Lion, showing really detailed about how to put together a trading plan and what to look for in the stock market. So I would encourage you to check that out. But if you're going to participate in the markets, then that's good, and take advantage of this great country and capitalism. Otherwise, if you're just relying on a job, unfortunately, jobs don't always give that great of a return, or your future raises are not always that great. Maybe you get a 3% raise or a 5% raise. Well, that's a lot less than making 10 or 20 or 30% in the market or more. So this is a valid way to grow your capital. So let's talk about 3 key parts of my trading plan. In other words, how I trade. Okay. Part of my trading plan is that I can keep my full-time job for income. Therefore, I don't need the market for income, and I trade for account growth and compounding growth of my capital. Okay, that's why I trade and invest. I can trade or set up my trades off hours when I have time to do so. Most of my work takes place on the weekends and or my days off. I just enter the commands in my online broker for execution. Okay, so my trading plan is fairly time efficient. I trade for price appreciation and not for short sales or shorting stocks. In general, stocks in the market tend to go up. Also, you have unlimited upside potential versus a limit when selling short. So you can only sell short down to 0. So that's 100% loss. So that's why I trade the way I do. That's just a few parts of my trading plan. So I put that out there because I want you guys to start thinking about how can trading or investing fit into your life. All right, now let's take a look at the overall market using the SPY S&P 500 ETF. First of all, we had 2 years now with no Christmas rally, and you can see that here. We had a market sell-off here last December. Okay, this actually started. I'm sorry, that is the wrong area of the chart. That is this year. The market was back here. December would have been right in this area here. So the market started to go down here in December 2024, and it ended. This market downturn really accelerated in February and came to a conclusion down here in April and then back up in May. If you could see that. So this was last year we did not have a Christmas rally, which led to a downturn in the market, okay, for about the first 4.5 months of the year. Now this year we also did not have really a Christmas rally, in my opinion. We had more sideways price action with a little bit of a dip here in the beginning of December and in November. And so I think this this dip here sent some fear into the markets and really halted any buying, which I think halted the Christmas rally. The good news is we're still trading at near all-time highs, going sideways. Now, this current market could go either way. It could go up, down, or sideways for the foreseeable future. My quick prediction is that we'll see a lot of choppy price action here for the first quarter of the year. I just don't see a whole lot of enthusiasm for buying or selling at this time. So there's a little bit of apathy right now in the markets, in my opinion. Also, just the December review. Again, December was pretty much a sideways month, as you can see right here, where most of the closing prices were within a percentage point of the week before. This is a weekly chart, so this is a week. Each bar is a week. We had a kind of this bottoming tail bar here mid-December, and so that's just what it looks like. It looks like just a state of consolidation or maybe a new base forming. Now that base, again, can go either down or up out of that base. One thing I don't like that I'm seeing right now is this big increase in this red volume down here. But it seems like the sellers are really trying to take this market lower. So I would say at this time, a little bit of caution going forward in the markets. All right, let's get to one of the easiest ways you can invest. Okay, if you've never invested before, is to buy what's called a total market ETF or a broad market ETF or a total market index fund, which gives you exposure to basically the entire American stock market. And you can see this is a Schwab US broad market ETF, symbol SCHB, and very similar to a mutual fund, only with much lower costs. And an ETF stands for Exchange Traded Fund. You can simply go on an online broker, enter your order to buy this ETF, and that will get you invested very quickly. Okay, at very low cost and with broad diversification to the market and broad exposure to the US stock market. Okay, but you can see if you didn't participate in this in the market this year, again, it went down and sprung back up from April, and from that point forward, we have been in a bull market since April 2025. Okay, this would be another example of the very similar type of ETF. This is the total stock market ETF from Vanguard, symbol VTI. Again, very similar looking chart because they both basically track the same stocks in the U.S. stock market. Okay. So let's get on. Quick comment on Bitcoin. Bitcoin did not have a good year. You can just see it recovered from the beginning of the year, where we had the sell-off in Bitcoin that recovered nicely, but did not continue that recovery past about October, maybe September, October. Bitcoin topped out and then really sold off pretty hard. So it looks like Bitcoin now is in more of a early stage 4, early downtrend. Unless it rebounds, it could rebound, but I do not invest in Bitcoin, so that's all I will say about Bitcoin at this time. Is that the chart just right now does not look very good for Bitcoin. All right, so what other sectors or industries are poised for growth? Well, right now, as far as stocks or equities go, it looks like these mid-cap stocks have participated in this rally from April and are holding at these highs. Again, because of the way this chart looks, I'm expecting this to maybe make a slight uptrend for 2026 in mid-cap stocks and in the market in general. I'm not looking for any sort of outperformance. But right now, I think mid-caps are poised for further growth. Again, this could go sideways or down a little bit over the next 3 to 6 months, but we will have to see. That's just a general observation, possible prediction on that. The small cap stocks look very similar to mid cap stocks, very similar chart formation. We've got this topping tail, but then that's followed by this bottoming tail bar, followed by this topping tail bar, and then this inside bar. So this could kind of go either way too. I think that will depend largely on the economy. Let's get into our 11 major sectors for the year and which ones I picked out that look somewhat positive or very positive. Right now, energy does look somewhat positive. We had this low in April. Now, this did not go into this major uptrend like the overall market did. It just kind of went up and then sideways. So for the last 5-6 months. But if this could get, if buyers become more enthusiastic about energy, this could easily start making new highs. But because it's in this base or this consolidation, it could also roll over and make some new lows. So right now, energy is a little bit neutral to positive, but that could be an area for growth for 2026. We'll have just to find out and react to price action. Okay. The financials look very good. Again, participated in the rally since April. Again, over the last 2-3 months have went sideways, but made a new high here in December. I like that. The financials made this new high. And now it looks like if that continues into the start of the new year, that looks very positive for financials as far as making new highs. Again, stocks generally making new highs out of a period of consolidation is a positive sign. So that's one area to consider, XLF and or stocks within the financials. A couple come to mind like Chase Bank. Capital One Financial has had a nice looking chart, if I remember right, and maybe some other banking stocks and financial companies. Then we have consumer discretionary sector. This looks fairly positive with the bottoming tail here in November, but a topping tail in December, which was a new high, but that looks like kind of a weak new high. Right now we're in a neutral area. It looks like sellers are trying to sell off XLY or the consumer discretionary sector. Again, I think that's going to depend on largely, does the consumer have money to spend? Is the consumer in a good position this year, or are times tough for consumers? So that is in a little bit of a neutral area to possibly pull back or sell off or go higher. So we'll have to wait and see on that where that goes. But it does look overall like it was a fairly good year in 2025 for that sector, and that could continue into 2026. Healthcare had a nice rally the second half of 2025, led by companies like Cardinal Health, and I believe it was Johnson & Johnson had a good year. But that's a nice igniting. Look at that size of this bar, this candle. That's an igniting candle followed by the bottom tail candle, and then this inside candle. So I like that over this area, over that 156 to 160 area. I like healthcare there as a sector. Again, you can look for stocks inside that sector for opportunities. Utilities had a great year for 2025, which is not normal for utilities to be in that strong of a bull market. I would avoid this area unless you're already invested in something that's paying a nice dividend. But you can see this market topped out back in October, and then it continued to sell off in December. So I would not be a buyer of utilities at this time. The industrial sector, as represented by this ETF XLI. Again, this looks very positive. Took place in the rally from April. It's pretty much went sideways ever since August or the summertime. But you can see these bottoming tails made a new high in December, and it looks like that price wants to continue higher in the industrial sector overall. And that's closely related to the Dow Jones Industrial Average, which is 30 large industrial stocks. This XLI actually has more stocks than the Dow Jones does. So the very diversified ETF for that one. That looks positive. Materials is fairly closely related to industrials, but it's more of a sector that focuses on things like chemicals and raw materials. But this looks like this is trying to make this turn up over this like $47 area. So that looks positive if that can continue that momentum up that way. This is not historically a great performing sector, just as a note of caution. But some individual stocks within the material sector may outperform, so you'd have to do some homework on that. The communications sector is generally a sector you want to be exposed to because communications is one of the best areas to have been in for the last 3, 4, 5 years. And you can just see this uptrend since early 2023. If you were not involved in the market or in this sector, you definitely missed out on a great opportunity here. But I expect this sector to just continue its advance forward with companies leading that sector like Google, Meta, and Facebook, and Apple, and any communications related company like T-Mobile, AT&T, Verizon, those type of companies. Real estate is showing some signs of coming out of this base. The problem is it looks like it's wanting to go down, and so that I would be very cautious about any real estate holdings I have at this time, unless you're in something that is, maybe an individual stock that is showing growth and or showing a very nice dividend. I could see a reason to hold on to real estate holdings for that, but had an all-time low back in mid 2023. Hasn't done much since then, and for sure pretty much sideways for last year. So real estate is an area that could potentially show some good investing or trading opportunities within that, but the longer term picture looks more sideways at this time. Here is another ETF that has come onto the scene recently in the past several years, which is, and there's probably other ones that have similar exposure, but this is just one I found called Defiance Quantum ETF, symbol QTUM, which is focused on quantum computing stocks. So that has been a huge theme over the last year to 2 years. And you can just see the volume coming into this ETF, where it was almost irrelevant back here, and then all of a sudden volume coming in 2025, and that definitely had a nice year when it comes to quantum computing stocks. I would expect this ETF to at least, because it seems like it's so extended, to actually pull back here for the first 3 to 6 months of 2026, and then maybe resume an uptrend, but it's really been bought up. So that is one to watch, I would say. Watch and keep some interest in the quantum stocks. Also, we have the US dollar index. And this looks, oops, I got off it. This looks to me like, this where the dollar was going lower here this year and then kind of went sideways. This looks like the dollar could continue lower, which my understanding with that is that erodes the purchasing power of American dollars. I may have that reversed, but that's how I understand it. And if that's the case, that could mean a little more inflation on the forefront and or consumers with less purchasing power. So we'll see how that plays out for the U.S. consumer and the U.S. dollar. It's not something that I trade or invest in, but just something that I watch out of pure economic interest. This is the chart to watch if you want to know where interest rates are headed. This is the 10-year Treasury note, symbol TNX. This pretty much is the chart to say which way are interest rates going. And over the last 3 months, they've ticked up slightly, back up to 4.18. They were down just at 4, just below 4. Now they've ticked up slightly to 4.18. I don't expect a lot out of interest rates this year, either positive or negative. But I could see interest rates pretty much staying steady in this area for the foreseeable future. Again, that's subject to the U.S. Treasury making decisions and the U.S. Federal Reserve making decisions and other economic factors that we just don't know about yet going forward when it comes to interest rates. Another great chart for 2025 was this chart here, the semiconductor sector. This is one I follow, symbol SMH, and you can just see this base forming here, and then it pulled back with the market into March and April, and then just ripped So if you weren't in semiconductors this year, that was a missed opportunity. Again, these sectors are going to be part of a total market index or the overall stock market indexes that I mentioned earlier. So if you're already invested in like something like a total market index fund, mutual fund, or ETF, then you would have participated in these gains. But this sector really was an outperformer this year, and so much so that I would not buy it now. This looks like this needs to pull back in or go sideways before that becomes a really nice opportunity in the future. Foreign stocks seem to do okay here the last quarter of the year, with Argentina showing this big spike in prices for this Argentina foreign ETF, symbol ARGT. So that looks like Argentina is setting up for a potential nice year 2026, and has been in a general uptrend for the past 3 or 4 years anyway. So if you like foreign stocks, that may be a place for you to consider. Here's another interesting chart of electric vehicles and the future mobility ETF, right? Symbol KARS. So one thing about the futures we just don't know, but this ETF is seeking to invest in potential companies that are trying to change the way we move about in the future. I'm thinking of, rideshare was a big opportunity a couple years back. Now we're looking forward to driverless cars, robo taxis, and maybe even flying cars or flying, drones for people, stuff like that. And this ETF looks very good right now, where it kind of made this move up, right? And now it's going sideways. It's consolidating. If this consolidates for another month or two, I really like this ETF just by looking at this chart. But you can research that for yourself if that's appropriate for you. But that looks like that is getting ready for that next leg higher. Okay, so that looks like a very good opportunity going forward. I already mentioned this one, the quantum ETF. There's probably other quantum stock ETFs out there that are pretty good too, but these are right now a little bit extended to the upside. Not the best time to buy. Now let's take a look at a case study in Cardinal Health. Okay, so I want to bring this up to you because this is a stock that I mentioned last year on probably at least 2 videos, maybe 3, because it looked like a pretty good opportunity, and there's several reasons why I said that. So this here is a 9-month daily chart. This is a daily chart with daily price candles. We can see here where this chart was more sideways, okay, just looking left to right, and then it came down here in April and then bounced back up very quickly. So this is when the market was kind of in the sell-off mode, and this stock also sold off during that time, but bounced up very quickly, went sideways again, and going into this earnings event, it was just buy. So this is one that was on my list, and this is a pretty good opportunity right in here, right above this area was a good opportunity, and we had a second chance over here later on after this earnings event. But the thing about it was these moving averages on this daily chart were still pointing higher, saying that this stock had a pretty good long-term trend, and also showing some demand, okay, on the daily chart. But one of the reasons I really liked it was actually the longer term charts, like the weekly chart here, because you can clearly see a slight steady uptrend in Cardinal as the market was selling off, or the market was pulling back. Okay, back in this area here, November, December, the market was actually selling off. Okay, and so this stock was showing relative strength through this period of time, through November, December, January, February, March, and April, right? It still affected the stock a little bit right here, but not nearly as much as it pulled down the market. This stock was still in a very slight uptrend, and there were several good buying opportunities last year alone in Cardinal Health. Here would be one here, this consolidation. Here was another one here right after this pullback, which I mentioned in a video. And then there was another one here, which I believe I mentioned in another video, where it pulled back, came back to these moving averages, went sideways for 8 or 9 weeks, and then just ripped. out of that area for Cardinal Health. So that was one of the stocks in the healthcare industry that was not only outperforming healthcare, but outperforming the markets, showing really good relative strength in Cardinal Health. I believe my comment at the time was, if you like a stock that's kind of slow and steady wins the race, I thought Cardinal Health would be a good choice for you. If you didn't see that video, then sorry about that. But monthly, I think the chart looked even better. Notice the bottom wicker tail in April 2025, right here. See that bottom and tail bar? That's a key bar. If purchased around 133, which is about where that was, and held this stock to the end of the year at 205 per share, you would equal an ROI, or return on your investment, of over 54% using technical analysis and relative strength of a stock versus the overall S&P market. So this is why I use charts. This is why my trading plan is focused on technical analysis. Just using this chart, you could have, realized a 54% gain in Cardinal Health in a fairly short period of time. So that's why, we use charts, because you can see what's going on with price. And for me, I'm a visual learner, so charts really help me out with understanding the stock market. And I hope these charts help you out. But that's just an example or a case study of a stock showing relative strength throughout this whole period. Yeah, I pulled back a little bit here, but then right in this area is where it really became a nice candidate for a buy opportunity. When the market was pulling back, the stock was going sideways. Okay, so that's what I wanted to teach you guys there about that opportunity. Let's take a look at the 4 stages. Again, if you don't understand the 4 stages, check out my other videos. But basically, stocks, products, and services go through stages of supply and demand, or popularity versus unpopularity, okay? And here's a stock, United Parcel Service, UPS, and this is a great example of the 4 stages and key price levels in UPS over the last 10 years. So what do we see here? We see a base or a consolidation over many, many years, right? And then in 2020, you can see the stage 1. Here's a nice volume spike indicating demand all of a sudden. And the stock just rips from, below $100, and it got up to, I believe, almost $250, $240, somewhere around there, over a couple year period. So that was a great time of outperformance, which happened to coincide with the pandemic, right? So you see stage 1, you see the stage 2 uptrend, and then we start to see a stage 3 where the stock is topping out. And a couple of key items in here were, that tell us that the stock probably has topped out would be, first of all, this new high, but a red bar, a big wide range red bar, new high, and it immediately pulls back. That was one signal that this was probably going to be sold off. But the second signal for sure that it was going to be sold off was this wide range red bar here, where just the sellers just took over. From that point forward, sellers really took over UPS and started just selling off UPS at lower prices over time. And today it's back in the range of a previous stage 1. So does this mean the selling is over for UPS? Could be. There's some early indications that the selling is coming to the selling is slowing or turning around, and one of those indications is this wide range green bar on earnings, and then 2 months of the stock going sideways. So you kind of get that first step up, okay? And that's also at the same time, we've got a definite increase in volume down here. That often indicates a turn in direction or a potential turn in direction. Also, another indicator is that this is happening at a previous key area of price and support. So it makes sense that buyers are stepping up here, because that's where buyers stepped up before. So those are 3 early indications that perhaps the selling is over in United Parcel Service and is becoming a more attractive stock to purchase at this time. Again, that's not a recommendation at all, but do your own homework on that if that's appropriate for you. The other thing that I think that's attractive for investors about UPS is the high dividend it pays. It pays over a 6% dividend at today's prices. So I think that was a pretty good example of the 4 stages of supply and demand using UPS as an example, and hopefully that helps you out. Anyway, that's the end of January's video. Thanks for subscribing and sharing this channel. I hope this review of the markets and some key concepts was helpful to you and your investing and or trading. Happy New Year, and may 2026 be your best year ever. Good luck. Thanks be to God, and God bless. We will see you in February.